Welcome back to Dollar X Dollar, your fast, no-nonsense tour of the biggest global business stories for the week starting Monday, November 17th, 2025. Nvidia kicked off the week with another huge quarter. Revenue surged 62% to $57 billion, and profit climbed 65% thanks to relentless demand for AI chips. Despite the strong results, Nvidia's stock reaction was muted. Its market value has eased from around $5 trillion in late October to about $4.5 trillion as investors cool on tech valuations. Other tech names faced similar pressure. Oracle is down almost 30% since September, and companies like Amazon, Meta, and Palantir have slipped as investors reassess high AI-driven expectations. Japan's economy shrank 1.8% annualized in the third quarter, its first contraction since early 2024. Exports weakened sharply as U.S. tariffs hit auto parts. At the same time, household consumption remains subdued under persistent inflation. The numbers highlight the fragility of Japan's recovery going into 2026. Oil hit one-month lows as markets reacted to speculation around a possible Russia-Ukraine peace framework. Reports suggest the U.S. may be urging Ukraine to consider an agreement that could eventually increase global oil supply, though analysts are skeptical and note Ukraine has rejected key demands. A stronger U.S. dollar added further pressure on crude. For the week, WTI crude fell 3.4%. Brent dropped 2.8%. Natural gas was flat, energy stocks lagged, with the XLE ETF down roughly 2.8%. Meta secured a major legal win. A federal judge ruled that its acquisitions of Instagram and WhatsApp did not breach antitrust laws. Regulators failed to prove Meta holds monopoly power, especially with competition from TikTok and others. The ruling removes one of the biggest regulatory threats Meta has faced. UK inflation eased to 3.6%, lifting hopes for a Bank of England rate cut in December. Meanwhile, the government announced rules targeting automated ticket resale bots. Some £85 tickets were being resold for more than £680. The ban aims to stop bots from grabbing tickets the moment they are released. Eli Lilly became the first healthcare company ever to hit a $1 trillion market valuation. The surge has been powered by massive demand for its two blockbuster drugs, Zepbound for weight loss, Mounjaro for diabetes and obesity. Recent quarterly results were exceptional. Mounjaro revenue up 109% year-on-year, Zepbound revenue up 184%. With insurance coverage expanding and an oral version of its obesity drug arriving next year, analysts believe this market could exceed $150 billion by the early 2030s. Competition from Novo Nordisk and Pfizer is heating up, but right now, Lilly is leading the field. The U.S. reached a new trade framework with Switzerland. Tariffs on Swiss imports will fall from 39% to 15%. In return, Swiss companies, including Roche and Novartis, will invest roughly $200 billion in the United States, strengthening pharmaceutical supply chains and advanced manufacturing. Crypto markets continued to unwind. Bitcoin, after touching $126,000 in October, is now around $92,000. More than $1.2 trillion in value has been erased across digital assets in 6 weeks as risk appetite cools and high rates persist. A UK court ruled that BHP can be held liable for the 2015 Brazil dam disaster that killed 19 people and displaced hundreds of thousands. Compensation proceedings will now move ahead. BHP says it already has remediation programs in Brazil with partner Vale and argues the UK case duplicates ongoing efforts. Home Depot lowered its annual profit forecast, citing soft demand for home improvement items. Target also reduced its guidance as sales continue to stagnate. Both companies point to a more cautious U.S. consumer under tighter financial conditions. Gold saw a lift after New York Fed President John Williams suggested the Fed could cut rates soon without derailing progress on inflation. Markets now price a 74% chance of a December cut. Gold gained around 0.5%, while silver slipped slightly. Physical demand in Asia remained muted amid uncertainty in rates. The U.S. added 119,000 jobs in September, better than expected, but the unemployment rate climbed to 4.4%, the highest in 4 years. Wage growth slowed to 0.2%, down from 0.4%, easing inflation pressure. The report was delayed due to a federal shutdown. October's jobs figures will now be combined with November's and released December 16th. Fed minutes show policymakers are split on the timing of further rate cuts. And that's your business news wrap. If you enjoyed this breakdown, follow $X for weekly business updates and deeper investing insights. See you next week.